It's just another Monday. You wake up, check your phone, and there it is. A message going viral everywhere. Take your money out of the bank today before it's too late. At first, you think it's just a rumor, one of those silly chain messages that circulate all the time. But when you step outside, something feels off. The streets are packed with people, ATMs have endless lines, and at bank branches you see tense faces, customers arguing with tellers because there's no cash left. The question becomes inevitable. What would happen if everyone, absolutely everyone, withdrew their money from the bank at the same time? To understand it, we need to know how banks really work. They operate under something called fractional reserve banking. What does that mean? If you deposit $100, the bank doesn't keep all 100 in a vault waiting for you to come back. They only keep a small portion, maybe 10 or 20, and the rest is lent out to someone buying a house, to a business that needs to grow, or it's invested elsewhere. The entire system only works because not everyone withdraws their money at once. It's like a game of trust. You believe your money is there, the bank believes you won't rush in to take it all out, and the wheel keeps turning. But what happens if everyone breaks that invisible pact? That's what economists call a bank run. Too many people demanding their money at the same time. The bank simply doesn't have enough cash for everyone. They start saying, "Sorry, we're out of bills, come back tomorrow." News spreads like wildfire. Other banks start feeling the pressure too. Within hours, panic multiplies. And this isn't science fiction, it's happened before. In 2008, during the financial crisis, some US banks saw thousands of people rushing to withdraw their savings, afraid the banks would collapse. In 2001, Argentina's infamous Corralito froze bank accounts, preventing people from accessing their money. Even during the Great Depression of 1929, the loss of confidence forced hundreds of banks to close. The pattern was always the same. Once trust was broken, banks couldn't survive. Now imagine this happening today. In a digital world like ours, where we pay with cards, transfers, and apps, a collapse like that would hit even harder. Companies wouldn't be able to pay salaries because transfers would be blocked. Supermarkets wouldn't accept cards because the system would be down. And anyone holding cash would guard it like gold, because bills would instantly become more valuable than ever. The chaos would spread fast. People would start bartering goods because accounts are frozen. Stores would shut down because suppliers can't get paid. Prices for the few products available in cash would skyrocket. The scariest part? We're not just talking about one country. This would trigger a global domino effect. Banks everywhere are connected. A massive run in the United States, for example, could pull down Europe, Asia, and Latin America within days. So, what would really happen if everyone pulled their money out at the same time? The answer is clear: the system would collapse. Banks aren't warehouses full of money. They're machines built on trust. They only work as long as we all believe in them. Your bank account isn't a box of bills waiting for you. It's a promise. And that promise only has value as long as no one questions it. So next time you check your banking app, remember, your money isn't sitting there, it's moving around. And what keeps the system alive isn't the cash itself, but the trust of millions of people that they'll be able to withdraw it whenever they want.